Hey, what's up guys, welcome back to another video for Trading Camp. And for this video I'll be going through a very simple 1-minute scalping strategy that we'll be using indicators with. And if you guys don't mind, make sure to hit the like and subscribe button. Really helps me a lot and only takes a few seconds of your time. So anyways, let's just not waste any more time and let's delve right straight into the video. So first of all, I'm going to bring you guys through the indicators that we will be using. First up, we will be using a moving average exponential. So go to indicators, metrics and strategies, search up EMA. You click twice on the moving average exponential and you'll be needing two of them. You're going to change the first one, the length, to 20. For color wise, you can change anything you want. I'm going to make it green and I'm going to make it thicker so that you can clearly see the demarcations and which line is which. The next one, you want to change the length to 100. Same thing, you can change to any color you like. I'm going to make it yellow so that it's pretty much easier to see. And this is your two EMAs and it's helping you to tell where the trend is going and how you're going to take your positions. So next up, we're going to use the stochastic RSI. Very simple strategy. You're going to search up stock in your indicators, metric and strategies. Search the app, click on the stochastic RSI, and that is the second indicator. So for this strategy, it's very simple. We'll be trading on the 1 minute time frame, and I'll be using the Ethereum chart as a way to show you guys how the strategy works. So for this, it's very simple. We'll be looking at two steps. The first step is to look at both of the EMAs. So in this case, that is your first step. You want to look at both of the EMAs. So you can see here we have the EMA, the yellow EMA, which is the 100 EMA, versus the green EMA, which is the 20 EMA. So when the green EMA, you can see that it follows the price closer and basically is hugging the price, whereas the yellow EMA is slower and it stays not as close to the price section. So how you're going to look at the EMAs and how you're going to judge where the trend is going? Basically, when the green EMA, the 20 EMA, is below the yellow EMA, the 100 EMA, this means that price is in a short-term downtrend and you only want to take short positions. This is because you always want to follow the trend. Same thing right here, you can see that when the green EMA is above the yellow EMA, where you can see that we're in a short-term uptrend. Right here, you can see we are clearly in a upward movement direction. So you might ask, how do you want to use this to take the trades? So whenever the green EMA is above the yellow EMA, you go long. Whenever the green EMA is below the yellow EMA, you want to go short. So yeah, just follow the trend. So next up, that's basically your first condition on taking the trades. Next up, you want to look at the stochastic RSI. So for you to go long, when the green EMA is above the yellow EMA, you want to wait for a crossover of the blue line above the orange line. So you can see here we have the crossover of the blue line above the orange line, and that crossover must happen below the 20 value area. So basically, when that crossover happens, it must be in this black area where the zone is not shaded. So here we have a perfect example, and let me show you guys the steps to take a long position. So first up, you look at the chart, you see that we have this breakup of the green EMA above the yellow EMA. So the 20 EMA is above the 100 EMA. What does this mean? It means that you want to look for long positions. So next up, you see that we have a crossover of the blue EMA above the orange EMA, and that crossover happens below the 20 value area, which means that it's below the shaded area and that is a valid position. So once that crossover happens, right here you want to take a long position on that candle. Stop loss you put at the yellow EMA in this case, or you can move it right below the candle itself, and you can aim for 1.5:1. So that will be a winning trade. Same thing right here. We have another crossover here, but since we are already in the trade, we'll ignore that. Here we have a crossover of the blue over the orange, and there's another valid position. You're gonna enter right there. Stop loss right below the recent swing low, and then 1.5:1, and it ended up to be a loss. So yeah, I'm going to be very transparent about how I take my trades. As long as it is a loss, it is a loss. I'm not going to cherry pick any trades, and yeah. So now I'm going to show you guys how to take short positions. It's basically the same thing as long position, but you just flip everything around. So in this case, first up, you want to look at the EMAs. Same thing. When the green EMA, which is your 20 EMA, is below the yellow EMA, this is when you want to take short positions because we are in a downward trend. So first, you've identified the trend. It's in a downward trend. You see the green is below the yellow. Next up, you want to wait for a crossover of the blue line of the stochastic RSI below the orange line, and this crossover must happen above the shaded area, which is above the 80 value area, and this is what we observe right now. You can see that the EMA is below the yellow EMA. We have a crossover at this point right here where the crossover happens above the 80 value area, so you want to take a short position on that same candle. Stop loss you put right above the recent swing high, and a 1.5:1. So we have another winning trade here. You can see we have another position. We have the green EMA below the yellow EMA. I'm going to take a position right there where the crossover happens. You can see the crossover here. The crossover happens above the 80 value area where the blue crosses below the yellow. So you want to aim for you put a stop loss right there. You can also put your stop loss here. You enter on the candle, and a 1.5:1. And right exactly where the price reached, managed to reach the take profit. And yeah, that is how you take your short positions. So let me just pick a random point of time and let's see how this strategy will work. So let me just drag until I find a piece of time. Right, let's start about here. You can see that we have this type of action where you have down, up, type of action. You want to avoid this type of trading action. You want for a clear break to the downside, or a clear break to the upside right here, or downside right here. So you can see that we have price breaking below. We have the green EMA breaking below the yellow EMA. So you know you want to look for short positions. So let's look for the crossovers. So here we have the first crossover of the blue line below the orange line, and the green EMA is below the yellow EMA. You want to take a short position there. Stop loss right above the candle, and a 1.5:1. So there's your first winning position. Same thing right here. You can see that you have the crossover, and the crossover happens above the 80 value area. Stop loss right above the recent swing high, and a 1.5:1. Same thing here. We have another crossover here. Stop loss right above, and a 1.5:1. Same thing here. We have another crossover. So let's enter, and a 1.5:1. So pretty successful trades. We're going to keep taking the trades. We have 4 wins in a row so far. Let's look at this. We have another crossover right here, but unfortunately it ended up to be a loss. So that's our loss after many trades. Now we have the break to the upside. So let's take the upside trade. You can see that we have the green EMA breaking above the yellow EMA, and we have a crossover of the blue above the orange. Enter on that. Stop loss right below, and a 1.5:1. Same thing here. We have the cross up right here. Stop loss right below, and a 1.5:1. Same thing right here, but we're already in a trade, so we're going to ignore that position. Here we have the crossover again right here. Stop loss you can put right below this recent swing low, or you can put right below this recent swing low. In this case we'll be stopped out, so that is one loss right there. So no worries, we'll enter again right here on this position. You can see we have another crossover. Stop loss right below, and a 1.5:1. So as you guys can see, this indicator is pretty accurate, but if anything, because you're trading on the 1 minute time frame, I'm going to be honest, the fees honestly might eat up a lot of your profits. So I would suggest using this on the 5 minute time frames. Definitely works as well. So make sure you guys try the strategy out yourself with a paper trading account, especially on the 1 minute time frame. A lot of times it will eat up so much of your fees and everything. So yeah, make sure to be vigilant with how you trade. And yeah, hopefully you guys enjoyed this video, and make sure to hit the like and subscribe button, and hopefully you guys will be able to learn more from my other videos as well, so check them out. See you guys, and goodbye.